Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the senior trader at the Forex Super Model, and this is the data cycle review for Monday the 26th of the 4th to Friday the 30th of the 4th 2021. Basically it's our version of the economic calendar. We've modelled tier 1 and tier 2 data, so let's have a look. Right, so T1, T2, tier 1, tier 2, we've got Jan, Feb, March and April. These are full months now, having just had April, the last week of April's trading. So these are discrete variables, they're independent of each other, and you can see trends in the data. Right, so we'll start with China and then move on to the dollar. We'll start these as we write them up. So China then, tier 1, -5, -5, +4, +7. So you can see that the tier 1 data is incrementally improving now into April. Tier 2, +10, -4, +11, -2. Now we had a strong March for China, but tier 2 is lagging at the moment at -2. So slightly mixed on the tier 2. Right, the dollar then, tier 1, -5, +1, -6, +10. So sort of struggling Jan to March. And then we've got this strong April, which are the months we've just had. Tier 2, +24, +36, -8, soft March, and then +30, a very strong April then for tier 2. So we'll stop it there, don't go away, and write the next two up. Right, welcome back. Next two then, Germany as a country as a whole, EUR as the bloc, 27 nations, right. Germany then, tier 1, +4, +7, +2, -1. So you can see German tier 1 starting to roll over. Tier 2, +7, +11, +11, -5. Similar picture for the tier 2. EUR is the block then. Tier 1, -6, +13, -2, +3. So we had a peak in Feb, deterioration, and now we're starting on the up again. Tier 2, +5, +6, +14, +9. So the tier 2 data in the Eurozone as a whole is firing away quite nicely, thank you. Stop it there, move on to the next two. Right, we're off again then. Yen, JPY, pound, GBP. Yen then, tier 1, 0, 0, -2, +2. So it's pretty neutral but slightly positive. Tier 2, +17, +5, -6, +16. So we've had a very strong Jan, then it rolled over to March, and now we're on the significant up in April. Right, the pound then, tier 1, +3, +8, 0, +5. So generally positive and reasonably strong. Tier 2, +5, +11, -8, that weak March again, and then +21. Very strong tier 2 showing for the GBP. Right, stop it there, next two. Right, here we go again. CAD, Canadian dollar, AUD, Australian dollar. CAD then, tier 1, +8, -4, +6, +4. So generally positive and moving forward really March, April. Tier 2, -1, +7, +5, +8. So tier 2 pretty strong from Feb onwards. AUD +2, +2, +6, -2. So peaking in March and a slight deterioration in April for the tier 1. Tier 2, +6, +8, +15, +10. So generally very strong tier 2 AUD. Right, last two coming up. Right, here we go. NZD, New Zealand dollar, CHF, Swiss franc, CHF. Right, NZD then, tier 1, +2, +2, -4, +1. So fairly steady and marginally positive in April. Tier 2, -2, -7, +2, -5. Pretty soft in the tier 2 on the NZD. And the Swiss franc then, 0, +2, 0, 0. So pretty neutral, marginally positive on the tier 1. -2, +11, strong Feb, -1, +8. So generally looking good on the tier 2 for the Swiss franc. Right, stop it there and then we'll do some analysis. Right, welcome back. Just to remind you about what's been happening in the flows for this week. We've had a negative opposed driver in the yen at -363. Front and back door flows. So these opposing positive flows are mainly going into the dollar at +271. Next into the pound at +97. And the euro was the negative rock at -5. So basically this last trading week we've had yen weakness driving, we've had dollar strength as a secondary driver, positive secondary driver. The pound's been medium strong and the euro's been dynamically static. Right, so let's have a look at what's been, let's just try and summarise these data cycles then. So China then, the tier 2's only slightly letting the side down, but the tier 1's very strong. So we'll give a neutral to uptick on the China data cycle. The dollar data cycle is very strong. Germany is soft, and the euro data cycle is actually on the up as a block. Right, the yen is strong as a data cycle. The pound is strong. The CAD is strong. The AUD is slightly negative on the tier 1 -2, but strong on the tier 2. So we'll give the neutral to strong there. The NZD is pretty neutral to soft. So on balance, it's soft, and the Swiss franc is neutral to on the up. Right, so if we think about the context of this, then we've had the Fed raise decision. Basically, they've not rocked the boat. They're printing like crazy. They're going to try and inflate, or it depends which way you look at it, deflate the debt away, inflate the debt away. So if you look at the dollar, you're likely to see dollar softness going forward. We've had a bounce in the dollar last day of trading with the 30th of Friday, but that's likely to be retraced. A soft dollar environment, the transmission is likely to be up equities, up commodities, it's like a soft dollar, up commodity FX, which is basically CAD, AUD, NZD. We'll talk about that in a minute. So you've got this like transmission, and normally in a soft dollar environment, you might consider that gold would be on the up, but there's a big question mark on that due to the yields and all other issues. Right, anyway, so let's look at that then. So you're likely to have a negative transmission in the yen via this equity transmission. So you've got flows out. So you've got negative flows out of the dollar and the yen going forward. And what are you left with? You're left with the euro and the pound in the majors. So those flows have got to go somewhere. The euro is likely to come up by default, and the pound is only operating at about 27% in terms of the modelled complex positioning. So the elbow room is clearly, and the pound, you look at the pound data cycle has been strong. You've got the pound rates decision next week. Okay, so the likelihood is you're going to see positive flows into the euro and the pound. With regards to commodities, commodity currencies, you've got the CAD, you've got the AUD and the NZD. Now, the NZD, whilst it has been the go-to currency for commodity currency for risk on, this will change, because the NZD is operating at about 67% in terms of the complex positioning. It's the exact opposite of the pound. The only complex which is actually operating higher is the Swiss franc. And that's at about 70%. So basically the elbow room is not in the New Zealand dollar's favour, it's in the CAD and the AUD. The CAD has had very strong data for quite some time, and the oil market is on the up, helped by the return to the global economy after the pandemic, hopefully, and this soft dollar environment. So you're likely to see the CAD outperforming. The AUD is likely to be outperforming as well, off the back of the China sucking in imports, raw materials, iron ore, etc., which hasn't been properly factored in. And the New Zealand dollar, whilst it will be de facto on the up in terms of some FX pairs, you just need the market to understand that they've actually been and done this. The NZD has been there and done it, and these are going to outperform the NZD, and that's why we're shorting the NZD against the euro, the pound, the CAD and the AUD, and we're also shorting the dollar against the euro, the pound and the AUD as well. Now our trades are roughly now, they're about 300 points down overall, but we have been building a position for basically 2 months now, and we've got a significant positions in these, and we should, once the market starts to use this macroeconomic flows in our favour, we should start to basically stay in profit and just build from this position. Now, hope that was useful. If you want a bit more detail on the flows, we've got the flow video for the same period. Take a look at that. If not, see you Monday for the daily briefing. Thank you very much.